Hello folks, this is Abhinay Gupta welcoming you to the Edupedia world. Today we'll take up a new chapter, that is Accounts of Companies. This chapter is dealt by Chapter 9 of the Companies Act 2013 and consists of 10 sections starting from Section 128 to Section 138, accompanied by Companies Accounts Rules 2014. So when you talk about accounts, the first thing that comes to your mind is the financial statements. So let's see, what is the definition of financial statement as per Section 2, subsection 40 of Companies Act 2013. The term financial statement is defined in this clause, that is clause 40 of Section 2, which says that financial statements includes a balance sheet, a profit and loss account, a cash flow statement, a statement of change in equity, and an explanatory note. So a balance sheet will be prepared at the end of the year, profit and loss account, or income and expenditure account in case of any not-for-profit organization, as the case may be. It will be again a cash flow for the financial year, a statement of change in equity if any. It will not be available for all the companies, but if there is a change in equity, you will have to give a statement for the same. And an explanatory note annexed to the entire financial statement. It will form an important integral part of the financial statement, right? And it will be a note that will be accompanying any of the above mentioned 4 documents. And as far as cash flow statement is concerned, that may not be required, that may not be included in case of a one-person company, a small company, or a dormant company. So in that case, you are left with basically the balance sheet and profit and loss statement and the explanatory note which is annexed thereto. So I hope you are clear with what the financial statements mean. So whenever further in the chapter we discuss about the financial statement, it will always include these 5 things. These 5 documents will always form part of the financial statement, obviously subject to the applicability of each. Now the first section that deals with the books of account is Section 128. It deals with the following aspects: the methods of preparation of books of account, the manner of maintenance, the location where it will be maintained, the registered office, the branch, whatever, the period for which the documents have to be preserved, who will be authorized to inspect it, and the responsibilities and the penalty related to these documents. This is indeed one of the most important sections in this chapter. If you can see, this has already been asked 7 to 8 times in your CA final examination. So you will have to know what are the provisions related to the financial statement about its location, preservation, period, maintenance, inspection, and all of those. Right? With this, you can see how critical and how important it is. So let's start with discussing each one of it individually. Right? First is the method of preparation of the books of account. Now, books of account will also include other relevant books and papers that has to be maintained for each financial years. By books and paper we mean the books of accounts, the deeds, vouchers, writings, documents, minutes, etc. All these things will form part of books and papers. So they have to be maintained for all the financial years. Now what are the methods of preparation of books of account? Let's get into it. So the books of accounts should give a true and fair view of the state of affairs of the company as well as the branch office, both of it, right? It should also be capable of explaining the transactions that were affected, the transactions taking place during the financial year. The books should be able to explain those transactions. As per your basic accounting principles, it has to be prepared on accrual basis and it has to be prepared according to the double entry system. So all the balance sheet, P&L, whatever you prepare, the books of accounts, the books and papers, it has to be on accrual concept. No cash concept is allowed in India these days. It has to be on a double entry system basis. The transactions should be explained and it should foremost give a true and fair view. So that is basically the method of preparation of books of accounts. Now the books of account can be maintained in physical as well as electronic form. Electronic form has been emphasized these days and that is one of the most important topic in the said act. The electronic form has been emphasized and it has been promoted. So you have provisions relating to the maintenance of books of account in electronic form, which was not provided to that very extent in your previous Act 1956, the Companies Act 1956. So over here, the manner of maintenance of the books of account in electronic form is basically dealt with the Rule 3 of the Companies Accounts Rule 2014. Now what does that rule say? The rule says that the books and papers, the relevant books and papers, books of account that are maintained in electronic form, that shall remain accessible in India. Like it is in electronic form, you keep it on servers, you maintain it on, you give it to an internet service provider, they maintain it on a server or something. So the only requirement of the act is that it should be accessible in India, wherever you maintain it. And it should be accessible in such manner that it can be reused for subsequent references, right? And another important condition over here is that they should be retained completely. Like all the documents, they have to be maintained as it is, the way they were originated, sent, received, stored. It has to be in the same manner, and all the details has to be included in it. And either you keep the scan copies, or if you have an electronically generated invoice or something, you keep the copies of them. The entire thing, however it was generated, however it was transmitted, you'll have to maintain it in that particular form in your electronic database. Similarly, the information received from your branch offices has also to be maintained in an unaltered form. However it was received from the bank, it has to be registered, it has to be maintained at the registered office in the said format. It shall not be altered. And all the documents that are being maintained in electronic form shall be capable of being displayed in a legible form. That means in a clear, readable format. It should not be blurred or in a bad quality that it makes the reader difficult to interpret or understand what it means or what it says, right? It has to be clear and crisp in a clear, legible form. And when you're maintaining it in electronic form, you should have a proper system for storage, a system for retrieval, display and printouts whenever they are required. And the documents that are maintained in electronic form shall not be disposed of unless they are permitted by law. And we have already mentioned, wherever be your books of accounts, so you will have to maintain a backup for the same. For the books of accounts maintained in India, for the books of accounts maintained at any place outside India, wherever it is, the backup has to be maintained in India. It shall be kept in a server which is physically located in India, right? And it has to be maintained on a periodic basis. And whenever the financials are submitted or filed to the ROC, it is the duty of the company to intimate to the registrar the name of the service provider who is providing you the server where you are keeping the backup. You'll have to give its name to the registrar. Okay, this is the person or this is the company on whose server we are keeping our books of accounts. Along with it, you will also have to give the registrar the IP address of your documents of the service provider and the location of the service provider. Where is it located? Where is it situated? So that it can be tracked. And where the books and accounts and other books and papers are maintained on cloud. Like if there are service providers which are real high tech and they don't keep it in a physical server, instead they use cloud for the same, and you access and store and retrieve from the cloud, then the address of the cloud and the service provider is also to be provided to the registrar of the company. So basically these are the rules that have to be complied with. It is the rule 3 of the Companies Accounts Rule 2014, and they have to be complied with when you are maintaining your documents in an electronic form. Documents means the books and accounts, the books of accounts and the books and papers. So the books of accounts have to be maintained, they have to be kept at the registered office of the company. The physical documents, they will be maintained at the registered office. And if in any case the board of directors they decide that they don't want to keep it to the registered office but at some other suitable place in the country, then what they can do is they can file a notice with the registrar giving the full address of the new location where they propose to keep the books of account, and this will be done within 7 days from taking the decision in their board meeting. And this notice will be given in the form AOC 5, right? And in case of the books of account of the branch will be kept at the branch office itself, but a summarized copy will be brought to the registered office or any other place that the board of directors has decided to keep the books of accounts, right? So now we have seen the method of preparation of the books of account, the manner of its maintenance in electronic form, what are the procedures, what are the requirements about the servers or service providers, the location where they'll keep the books of accounts, which are in physical form, the books and papers, that is the registered office or any other office. For branch office, it will be kept at the branch. Now we see the preservation period. So in general, the government has said that the Act says that the books of accounts has to be kept with the company for 8 financial years at least, which means that if the Act or if the law demands your books of account in the current year, you will have to produce the documents for 8 preceding financial years. It can ask you at any point of time to show the books or to display the books of accounts of any of the 8 previous preceding financial years. So you'll have to maintain the books for 8 years. But in case if the company is in existence for less than 8 years, for say for 5 years, then obviously you can't ask for book for more than 5 years because the company wasn't in existence. So the 8 years is the limit. If the company was existent before 8 years, then you'll have to maintain the books for at least 8 years. And then you can dispose it off. But in case the central government requires you to maintain the book for a longer time, you will have to abide by the given directions. And that will generally be done in case of investigation which is ordered by the central government. For that investigation, if they want it to be preserved for a longer period, it will be preserved. Otherwise, 8 years is the general term for which you will have to maintain the books of accounts. Now, inspection of the books of account. This is the key in this section. This is something that you will have to understand, right? And this is not only covered under section 128. For inspection purpose, you will have to refer other sections like section 206, 212 and regulation 89. If I talk in general terms, in a summarized way, then section 128 says that inspection can be done by the director of the company. Section 206 includes the registrar of company and the officer of CG. The power is extended to those people to inspect the books of accounts. Section 212 says that the officer of SFIO, Serious Fraud Investigation Office, can also inspect the books of accounts. And the regulation 89 of table F. Regulation 89 says that the board has the power to determine that to what extent it will give out the power of inspection in the hands of the members. And those members who are not directors. It will define the extent to which they can inspect the books of account. So regulation 89 says that no member will be allowed to inspect the books of accounts unless it is conferred upon him by the law, or he has been authorized by the board of directors, or the company in a general meeting passes a resolution to allow the person to inspect the books of accounts. So what does section 128 say? That is our first priority over here. We can discuss the rest of the sections later in the slides. So section 128 says that the books of account will be open for inspection to the directors. Where will it be open for inspection? At the registered office, or in case where the branch where the board of director has shifted the books of account to some other place by giving the notice to the registrar, to that place, right? Wherever it is, as the case may be. And they will be allowed to inspect the books of account only during the business hours. And the books of accounts which are not maintained at registered office but are maintained outside India, then in that case the copies of such books of accounts will be produced to the directors for inspection. From time to time, whenever they want to inspect it, they can call for the copies from abroad also. And in case the board wants to inspect the books of account of its subsidiary company, it can do so by authorizing a person in its board meeting. They will have to authorize an individual who can go and inspect the books of the subsidiary company. And as in all inspection that you have seen so far, over here also the officers of the company, they have their prime duty to assist the inspector with whatever help they need, right? Now these were the provisions of the Act, provisions of section 128. Now the Companies Rule 2014, to be very specific, Rule 4 of the Companies Accounts Rule 2014 also has some points to make on the inspection part. So what does Rule 4 say? Rule 4 says that the summarized return of the books of account that are maintained outside the country shall be sent to the registered office every quarter. That means on quarterly intervals, right? And they have to be kept open to the directors for inspection. So over there what we have seen is, as per section 128, the board of directors, when they want to see the book, when they want to inspect, they can call it if the books are maintained outside the country. But Rule 4 says that the books of accounts that are maintained outside the country will have to be sent to India. A summarized return will have to be sent to India every quarter. Okay. And now if the director wants to get deeper into it, to get into deeper detail and get the detailed books of account, they can do so, but for that they will have to furnish a request to the company seeking the full details of the books of account or the particular section that they want. Now it is the responsibility of the company to produce such financial statement to the director, and that will be done within 15 days from the date of receipt of the request from the directors. And the important point to be noticed over here is that the Rule 4 infers this power only on the director himself. That means the director cannot send a request to get the books of accounts, the detailed books of accounts, by any of the power of attorney or agent or representative. If he wants, he will have to raise a request himself, and he will be the only person who will be authorized to inspect the books when they come. He can't appoint a chartered accountant as an agent to please go and inspect my book. He can't do that, right? It's not about chartered accountant, it's about the agent. He cannot appoint any agent to inspect those books of accounts. So that was about the inspection part. And now we come out to the final point, that is responsibility and penalty. Now responsibility. Who is responsible for maintenance and preparation of the books of accounts? So the responsibilities is entrusted upon the MD, WTD, CFO or any other person in charge by the board. That means the managing director of the company. He is the person who is responsible. Along with him, the whole-time directors who are in charge of the finance specifically, and the chief financial officer, right? And apart from these three, if the board entrusts these responsibility on any fourth person by passing a resolution, then that person. And now the final important thing is penalty. So in case of any non-compliance of any of the above provisions of this section 128, maybe any default with the location, with the preservation period, with the inspection, manner of maintenance, manner of preparation, whatever. If there is a default at any point of time, if there is a non-compliance of this section, then the person who will be found to be at fault will be punished with an imprisonment which may extend up to 1 entire year, and a fine with minimum of rupees 50,000 and maximum of rupees 5 lakh, irrespective of the size of the company, irrespective of the corporate strata of the company, whatever it is. It may be public company, private company, right? So the fine has been monetarily fixed. It will range between 50,000 to 5 lakh rupees, or at some point of time both the penalties will be practicable on the person. And recently on 4th April 2014 there was a general circular numbered 08/2014 which says, it was a MCA circular which says that for the period commencing on and after 1st April 2014, whenever you prepare the books of accounts or the board report or auditor report, the provisions of section 128 of Companies Act 2013 will be applicable. So the provisions of section 156 would be applicable for the period that commenced before 1st April 2014. And the applicability of Companies Act 2013 was confirmed with the circular number 8 2014 to be the financial year commencing on and after 1st April 2014. Now before winding up this class, as you can see you have been asked questions on this section 7 to 8 times already in your CA final exam. So it is a very important topic, and recently in 2013, 2014, in the past 2003, 9, 10, 11, you have always been asked this question frequently, very fluently. So I would like to discuss one question, the question that was asked in your November 2014 examination. So I'll give you the entire story, what the question asked actually. As per the question, there was a shareholder, Mr. X, who held the majority shares of the company, somewhere close to 76%, right? And according to that person, the company was functioning very well, but the board of directors, they didn't declare the dividend. So since this shareholder was not convinced, he wanted to inspect the books of account and he asked for the permission for the same, which was denied by the company. And now the question says that you have to examine and advise the provisions relating to the inspection of the books of account and the remedy available for this shareholder. So in this case, the entire provisions of the Act of the section 128 along with rule 4 that we have discussed, we'll have to mention that, right? And since the question asks for the question is dealing with the inspection portion, so you will also have to include section 206, 212 and regulation 89 that we have already discussed in the class, right? So you will have to say that the power of inspection lies with the director in section 128, lies with ROC and the officer of CG in 206, lies with the officer of SIFOI in 212, and also to members with certain conditions or with respect to the approval from the board in regulation 89. So in this case, since he is a member, so section 128, 206 and 212 stands invalid for this person. So the regulation 89 is what comes into play. But again, neither does this person have an approval from the board of directors nor from the members or the shareholders. So as per the question and as per the act, as per the rules, this person will not be allowed to examine the books of account of the company. Hence the contention of the company is correct. If they didn't allow him to inspect, then they are correct. But again, the question has asked you for the remedy. Now that is the catch. Now in case of remedy, what remedy will you give? Obviously, if he wants to inspect, he has to gain the approval of the board. So how do you provide him a solution? It's very simple. Since this person acquires 76% of the vote, he can easily pass a resolution in the shareholders meeting and appoint himself as a person and allow himself to inspect the books of account. And in that case, he will be allowed to inspect the books. For that purpose, even if he has to be a director of the company, he can appoint himself as a director. He has 76% of the vote. And then automatically he will be entitled to inspect the books of account. So this is the remedy that is available with the person. So when you get the questions in your examinations, you will have to keep all these things in mind. These are minute details, but you will have to analyze and understand these. Now, there is one more question that I think that I would be very interested to discuss with you people, because there is a little confusion in that chapter. And if you refer your practice manual, the December 2014 edition, you'll find a question over there. And the answer that is given in the practice manual is not very satisfactory, because no provisions as per what is given in practice manual exists in Companies Act 2013 or even in the rules. So let's discuss the question. So it is the question of your May 2013 examination in the CA final curriculum. As per the question, what happened was Mr. X, who wanted to inspect the books of account of the company, appointed his agent, who was a chartered accountant, right? And the company objected it. So that was a question, that if the company can refuse the agent to inspect the books of accounts. So the answer that is given in the practice manual December 14 edition, it says that Mr. X will be allowed to inspect the books of accounts. Mr. X will be allowed to appoint his agent to inspect the books of account if he has been authorized by the board of directors. If the board of directors, they pass a resolution, he can do so. Right, as per the provisions of the act we have seen, he can't. Like, the act remains silent on the agent's part, but if you call a book from abroad, the agent can't. Over there, the act, actually the rule 4 specifically denies that you can't appoint an agent. But in case of inspection of a general book of account which is maintained at the registered office inside the country, the act doesn't say anything specific on that point. But as per the practice manual, if you pass a resolution in the board meeting, you are allowed to do that. But if we refer to a case study in the past, there were 2 case studies in the past. The first case study was the Vakharia versus Supreme General Film Exchange Company Limited. According to that case study, according to the solution, the director is entitled to inspect personally or through an agent, provided that there is no reasonable objection and the person who is appointed as the agent does not use that information for a competitive company, for its rival or something. Right, and similar hearing was also given out in the case of Sugrabhai Alibhai versus Amti Property Private Limited. Right, so in these 2 case studies, what we see is that the director is generally allowed to appoint an agent if there is no objection and the agent does not use the information for anything against the company. That was the decision of the court in 2 of the case studies. So you can mention the 2 case studies in your examination if such question appears again, right? Although it has been mentioned in your practice manual that the board resolution will help, but since there is no such provision in the Companies Act 2013 nor in the Companies Rule 2014, so on a safer side, we would suggest you to avoid that answer to this question and go by the case law, because the case law already exists and it has been decided, right? So that was one, because there was a confusion, so I thought of discussing it with you. So that will be all for the day. This is Abhinay Gupta signing off. We'll see you in the next lecture. Thank you. Bye bye.